All right, everybody, welcome to a very important chapter. We've already learned how to read and understand candlesticks and trendline support resistances, and that helps us understand where the buyers are, where the sellers are, and how they are behaving, how strong they are, right? We've looked at different indicators like the RSI oscillator to show us momentum and strength in buying or selling movements. And we've looked at exponential moving averages to show us different support and resistance levels based off historical price. Now it's time to finish putting it all together with a look at harmonic trading. And this is a methodology that utilizes the recognition of specific structures that possess distinct and consecutive Fibonacci ratio alignments that quantify and validate harmonic patterns. I just want to, say real quick, this is a book called Harmonic Trading Volume 1 by Scott M. Carney, so all credit goes to him. This is his creation. It's a great book and I highly recommend it if you're more into harmonic trading. I just want to give you guys a little introduction to exactly what harmonic trading and Fibonacci numbers are. So the Fibonacci sequence was discovered by Leonardo Fibonacci de Pisa, as you can see right here in his famous book Liber Abaci. And it was a mathematical sequence where he discovered a certain pattern that repeated throughout and into infinity, and it repeated into infinity, and he found it in different places in nature throughout the universe, right? There's ancient examples. You can see here the Great Pyramids in the universe. There's examples in the stars, the planets, in all kinds of astrology, right? In biology, in the way a wave from the ocean tumbles, waves to tumble when you're surfing, in the dimensions of your hand and your arm, and different ratios all over the place. But the important thing for us is that these ratios, you can see in the shell, that these ratios, the human body, like I said, these ratios, they repeat over and over again on our charts. Okay, so what we need to know is that phi, the 1618 extension, and its inverse 618, which they call the golden mean or the golden ratio, are the most important Fibonacci numbers. And traders are looking for these levels because they repeat over and over again in the charts. So that being said, all credit to Scott M. Carney for that book. I just wanted to read to you where Fibonacci came from real quick and introduce that to you. So here we're looking at a chart of VET USD. We're looking at VeChain on a 4-hour chart. Let's just have a small introduction to Fibonacci retracements here. Let's clear up the chart a little bit so we can be looking at a clean chart. I'm just going to leave this resistance level here. You can see this resistance that got tested twice. Eventually broke and became support on this retest. We've spoken about that, so I hope you understand that. If you don't, please go back and understand that. And this same thing right here, right? This resistance level got broken, and after resistance gets broken, it becomes support. We can drag it to the left and see that it was support before. We got several wick bounces, so it's an important level. Remember, map out your important levels. Now, if we were to do some other things, we can draw some trend lines, right? And look for some trend line support and resistances that are being respected, right? But right now, we're going to talk about Fibonacci retracements. So, in order to measure Fibonacci retracements, what you want is a swing low to a swing high. What that means is you want to measure a move, an impulse move usually, and you want to look for a retracement. In other words, remember there's only two trends, and so if we're looking for bull trends, there's impulse in markets, and then the correction pullback, the consolidation pullback that usually goes in a square. This consolidation pullback is referred to as a retracement, right? So when the market is retracing, we use Fibonacci retracement tool to find important levels where price might find support. So if you remember from our chart patterns chapter, I told you to most importantly know your head and shoulders and your double and triple bottoms. So maybe you already identified this, but we have a triple bottom right here, right? And so this at one point was a potential triple bottom because we didn't know how this played out, right? So even at one point you were here, you were thinking double bottom. The sellers failed to make new low again, so it's now a triple bottom, potential triple bottom. Maybe once this trend line right here is broken, it's getting validated for you, and then once you reach the neckline level here that I have highlighted with this area, you know, you're fully confirming your triple bottom. What happened here? I'm sorry, where is my chart? So when you're looking for this triple bottom here, and you get this bullish engulfing candle that indicates that this third bottom might hold and the buyers might be coming in strong again like they have the last two times, then you get this impulse move, pretty vertical move of straight green candles. You have an impulse move, right? You've broken the recent highs. Like I said, you've broken this trend line here that was acting as resistance, and now what are you doing? You're pulling back, you're consolidating, you're retracing, in other words, right? So this is the exact time when we grab our Fibonacci retracement tool. So what you do is come here to the side of TradingView and select Fib retracement right here, and you go ahead and select it. And what you're going to do is click on the bottom of the move, the very bottom. You call this swing low, where the move starts, and you're going to drag it up, and you're going to finish right here at the top of the move, swing high. I'm just going to drag it out to the right because I like to visualize my levels out here. And you now have what I mentioned was your golden ratio, your 618. Now, when you first do this, you might have a bunch of levels here, your 382, your 50, your 786, and your 886. Your most important levels, as well as your 0 and your 1. Okay? So, these are your most important levels. Let me just go through these to explain to you exactly what they all mean. So 0 is just the end point. So this means you've retraced 0% because this is where it starts, right? And so conversely, if you get to 1, it means you've retraced 100%. You've retraced the whole move, right? 50% is in the middle. That means you've retraced 50% of the move, right? And you know, and that's how it works. So 3082 is a 38% retracement, and 618 is a 61% retracement of the move. And so this is the golden ratio. This is the most prevalent one in trading. You'll see it over and over again. However, the stronger an impulse move is, the least likely it is to hit the 618, right? The more shallow the retracement is. If this was a slower impulse move where we were going up like this, maybe 1 or 2 doji candles or red candles along the way, then perhaps we would have retraced and found support at the 618. But see how vertical this was? Straight green candles, not one red candle, and it happened so fast. You know, it only took about 5 candles to get there. So it was such a strong move that we only retraced to the 50. You see that we tapped the 50 barely. You know, we might not have even tapped it, but then we printed this green candle here in the 382. We closed above it and we found buyers there. So we hit a 382 or 50% retracement here. Again, from the chart patterns chapter, you might identify this bull flag, right? So now you got a bull flag off of your triple bottom bullish chart formation, retracing into your 382 fib retracement, finding support because you printed this big green candle rejecting the 50. And if you want to go ahead and draw this this neckline level right here, right? You can see, if you see this kind of as a double bottom with this the neckline, which is very valid because you can draw this left and see that it was a support level here. We broke through that and retested that level, right? And so now that level, let me clear this up here. That level is acting as support, right? And what I like to do is just show the level that we are respecting, right? So I'm going to go ahead and do this like this, because we bounced off the 50 and we found support, right, at the neckline of this double bottom. Then we continued, and same thing, guys. When you're looking for, you know, you're looking to enter at, you're looking to find support and look for bullish confirmation and clues with your technical indicators to enter at one of your Fibonacci pullback levels where price may have bottomed out or found support. Now just remember to you know, typically it's advised to wait for bullish confirmation, like a green candle, and look for confluence, like, you know, be on a support level or a chart pattern like a bull flag, etc. Break new highs, RSI confluence, right? So we have a 50% retracement, and now we impulsed again because we made higher highs. And again, You're looking to get involved, you're looking for an entry, well, grab your Fibonacci tool again from swing low, and this is the new swing low, right? Because these are the higher lows. To swing high, which is right here, right? The high that we made up top of this wick before this pullback started. Now you can see that we passed the 50, right? So we have to turn on our next Fibonacci retracement level, and it looks like it tapped the 618, and that's exactly what it did. So you can see here we found support on the 618, and again, this was a previous support level as well, right? You can see it bounces. We had this one up earlier, so this was another good opportunity to get involved. You're gonna find the more you chart and the more you throw your Fibonacci levels on the chart, they work like magic. Again, wait for confirmation. Here you can see, what did we have? We had 1, 2, 3, 4, 5 long lower wicks rejecting this level. Remember from the candlestick chapter, wicks, especially a lot of wicks lined up, are showing rejecting the level. Why? Because these were all big red candles at one point, but the buyers managed to push price all the way back up. That means we know this is a strong level that's only confirmed with all these other bounces, and this rejection bounce here, this bounce here on the top of the bull flag. We know this is a strong level. All these wicks are confirming it. We got a 618 golden ratio bounce. We printed a hammer candle here, so this is bullish. Even more, we printed a bullish engulfing candle right after that. So all good opportunities to get involved, right? And that's how it works, guys. Fibonacci retracement levels, right? And you can do this over and over and over again. You know, we can draw the next move from the swing lows to the swing highs here. We can see we just tapped the 618 and rejected it, printed a hammer candle and impulsed again, and here we failed to make new highs, but here we've made new highs, so we have a new impulse move. Let's draw from the lows here of this hammer, swing low to swing high here. See, this was a stronger move, which we can tell because this is 1, 2, 3, 4 straight green candles, right? 4 straight green candles, then we started a pullback. There was no doji, no red candles there, and it looks like only a 50% retracement, and that's exactly what it was. We found support at the 50. Why might this have been another clue that we wouldn't make the 618 besides the strength of the impulse? Well, if you said previous resistance, you got it. If you look to the left, this was kind of this mini double top, this local double top here, and once we broke it, that resistance became support, right? And now we are going on to new highs, and we can do this over and over. And remember, as long as something is making higher highs and higher lows, we are bullish. So this is a way for you to look for entries. And whether you believe in, you know, universal Fibonacci golden ratios or not, it's kind of a self-fulfilling prophecy, because a lot of professional traders are looking for the fib levels. These are important levels in charting. You can see again, now we broke a very important level, because this was, let me make this bigger here. This was this previous big structure resistance where we had this big double top that lasted for almost a month or a week here, right? And so once we broke that one and made new highs, we were very bullish, and we hit a 618 retracement, printed another hammer candle right there, right? Right there, it acted as support. And then we had a local support, because you can see the hammer candle was the highest, the previous highest of this previous move, right? And it goes on and on, guys. It goes on and on. These are all little bull flags. You know, you can be drawing asymmetrical there. Remember, the consolidation pullback, any kind of bullish chart pattern you're looking for, and you combine that with your Fibonacci. So the new swing low to the new swing high, you have a 618 entry here. You tap this trend line to support again of the symmetrical triangle, right? And as long as you're making higher highs and higher lows, you are bullish, and you can stay involved in this market until it starts to show signs of a bearish reversal. What would that look like? A head and shoulders, a double top as we had here, a bearish reversal, right? Then it went on to make lower lows and lower highs, double top, triple top, head and shoulders, right? Lower lows, a bunch of wicks up top, inverse hammer candles, that kind of stuff, right? But as long as it's making higher highs, you can continue to look for your entries. And Fibonacci numbers are used across all markets in all technical analysis. And that is how you look for Fibonacci retracements to enter markets. We can open some other charts just to show you other examples here, right? Okay, so I think we talked about this in another one of the videos here. Let me get rid of this. I think it's the star. This inverse head and shoulders here, this bullish head and shoulders here for Ethereum. You can see we wicked, so we probably respected the 50% retracement here, right? When we formed the right shoulder. We found rejection before the 618. We completed this bullish head and shoulders. We impulsed again to this falling wedge. Let me get rid of this. We go from the right shoulder to these new highs. You can see that this was probably only a 382, and not even, that's how strong Ethereum was, but this was a previous level, right? 382. Right now we are testing for sure a 382, and we tapped the 5. We're printing hammer candles, making new highs, and these are just the levels you look for over and over again. We have one here, as you can see. Let's draw that out from the low of this down channel bull flag to the breakout. You can see we found support on the 50% retracement here, and we measured the new move from the swing low to the new swing high. You can see that we're finding some support or consolidating around the 382. You can see how price respects these levels, right? Even when you finally do break through, look at where the wick comes to, 382, and it finds a rejection, right? Let's go to Bitcoin and see what that looks like. We have some levels drawn out here. So let's say this long-term rising wedge, right? You can see we have this support trend line here. Then we printed this sort of inverse head and shoulders, bullish head and shoulders, and we came to retest this trend line right here. So let's see what kind of fib levels we found from swing low to new swing high here, right here, right? You can see we tapped the 618. We printed 3 hammers on it, and that coincided with this gray long-term rising wedge trendline support. So again, try to find confluence with your technical indicators, right? That was a great entry point, that right shoulder. Then we formed this sort of double bottom here, right? We came up, got rejected there, had a little pullback retracement. So during that retracement, if we were looking for an entry, let's swing low to swing high. Let me make this bigger here. You can see we found support on the 50% retracement, and if you draw that to the left, that was the previous neckline here, previous high, previous resistance is now acting as support. Printed an inside bar candle, and it's been up ever since, right? And this works both ways, guys, in case you're wondering. If we were going to do it backwards, we see a bit of a bearish impulse move here. So we're going to grab the Fibonacci from high to low. You always draw from left to right, okay? From left to right. So if you're measuring a bearish move, you're going from the swing high to the swing low, left to right. And if you're measuring a bullish move, you go from the swing low to the swing high, left to right. How we do it. Some people make the mistake of maybe going right to left like that, and they're measuring a bearish move backwards. That's not what we want to do. Okay, so you can see this bearish impulse move found support at the 50% retracement here. It put in a bunch of wicks, bunch of inverse hammer candles, found support, and continued on downwards, right?